Welcome to It Depends, a sales tax podcast by TaxConnex. I'm your host, Brian Greer, joined by my colleague, Jeff Meggs, and we're super excited that you've joined us today. Sales and use tax can be confusing and overwhelming, but it doesn't have to be. Whether you work in an industry or a CPA firm, or just someone who wants to stay informed about the latest sales tax laws, we've got you covered. Periodically, we'll explore different aspects of sales tax. So whether you're a tax pro or a novice, in industry, school, or a practicing CPA, tune in and join us as we attempt to simplify the complexity of the sales tax world. This is It Depends, because with sales tax, there's rarely just one answer, and often that's our answer to many questions. It just depends.
So welcome back to It Depends podcast series. Today we're going to discuss sales tax crimes. A little bit of a twist on what our usual topics sound like, but we're going to specifically talk about a story out of New Jersey where a restaurant owner is in the process of pleading guilty to sales tax crimes and actually is facing prison time. Let's start by just a grasp of sales tax in general. Sales tax is generally a privilege tax imposed upon a retailer doing business in a state. And while the intent of the sales tax is typically to be borne by the customer or the consumer, the states typically hold the vendor responsible for the collection, reporting, and remittance of the tax. So as such, this sales tax is usually referred to as a trust tax. And as a trust tax, what we mean is this is property of the state that's been entrusted to us as the vendor to manage on behalf of the state to facilitate getting the monies from customers on each of the transactions through to the state's coffers. Generally, sales tax is applicable to sales of tangible personal property and enumerated services. So it's not always about tangible personal property. There are a number of services. And I think when we talk about restaurant activities, there's obviously a component of services involved. So charges for meals served by restaurants are typically subject to sales tax. And when we go to a restaurant, we're going to see that sales tax charged to us on an invoice or a bill. And the vendor, the restaurant owner, is responsible for collecting that tax as an agent on behalf of the state. And then on a periodic basis, they're going to report that tax and pay it to the state. Typically, that's done on a monthly basis. So if I went in to have a meal today and purchased something, let's say in May of 2024, that tax would likely get reported on a return that was filed for the period of May in June of 2024. And failure on the part of that vendor to report and pay that tax is where we get a potentially criminal liability or criminal charge. So when we think about the way states manage the sales tax function, they are, in fact, holding vendors that are doing business in the state responsible for the collection and remittance of the tax. But that also expands to what they refer to as responsible persons. And what are responsible persons? Well, responsible persons are generally an officer or a critical employee of the entity, of the business. And that officer and employee is committed to being responsible for the duty to collect and remit the trust funds on behalf of the state. So in the event that the entity collects tax and fails to remit that tax to the state, that responsible person can be held personally liable. And this is true even in a C Corp environment. The corporate officers themselves can be held personally liable. We are talking today about a specific case in New Jersey. And in 1993, the courts in New Jersey addressed this issue of responsible persons, and they outlined the definition for purposes of this sort of affiliated liability. And it references the contents of the corporate bylaws of the business, the status of the officer or the employee or the stockholder, as it might be, whether or not they have authority to sign checks, what level of authority they have to make decisions or to direct operations of the business. Do they have the authority to hire and fire those that are specifically and directly responsible for managing the sales tax? And are they responsible for signing the returns that are filed? And do they have day-to-day involvement in the business and some level of management responsibility? Ultimately, these are people that do have discretion and power to control the payment to corporate creditors, vendors, customers, and this would include state government authorities. And lastly, do they have some level of knowledge, or should they have some level of knowledge of any deficiency or derivation of sales tax remittances? And bringing all of that back to this New Jersey case that we kind of wanted to introduce today, we have a restaurant owner in New Jersey who between the years of 2015 and 2022 operated in a fashion whereby this business collected sales taxes to the tune of $496,000 and essentially pocketed the tax. It is not unheard of that companies find themselves in cash flow challenges and circumstances whereby they've invoiced and charged tax to their customers during the course of a period. And when it comes time to reporting and paying that tax, they find themselves cash poor. And it is tempting to reach into the pocket of the sales tax you've collected and use it for operational purposes. And so in this particular case, the person by the name of John Garofalo Sr. took this sort of step. He was the operator of Mario's Tutto Bene restaurant, and he basically exercised in what the state believed to be an intentional scheme to pocket or defraud the state out of hundreds of thousands of dollars in sales tax over several years. So upon identification of this, he was charged after an investigation by the New Jersey Division of Taxation. He was charged with a felony. And in doing so, he was found guilty, actually pled guilty in middle of 2023 of this crime. It was a second-degree theft by failure to make required disposition of property. And he admitted that he had this scheme working for that period of time. And what really becomes challenging here for anyone that finds themselves in this circumstance is he willingly paid back this tax. So once he was charged, once this came to light, he paid back the $496,000 in tax. Notwithstanding, the state is recommending a 3-year sentence, a 3-year prison sentence for Mr. Garofalo. So the message is clear. If you're in a position of responsibility for the charging, collecting, and remittance of sales tax, take it seriously. It is not just a corporate veil that you have to be concerned with. It is a personal responsibility to some degree, and it is essential that you have both the mechanisms, processes, and intentions to comply on a regular basis.
This has been It Depends, with another episode explaining the complexities surrounding sales and use tax. We'll see you next time.